Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
I tell you, one of the biggest pieces of news for me today, or it came out yesterday, Apple. I mean, here's the Bloomberg headline. Apple weighs using outside AI power to power Siri in a major shift. This is Apple saying, we kind of can't get this AI thing going, so we'll let somebody else do it for us. To me, that was shocking. Stock market, like the stock's up a couple of percent today, but I need to figure out what's going on here. So I said, Mandeep Singh, Bloomberg Intelligence, senior tech analyst, I need you in our studio here. Mandeep, to me, this seemed big.
Yes.
I mean, Apple, they got the new headquarters. They got like a gajillion scientists. They're saying we can't really get AI as well as we want it, as quickly as we want it, so we'll maybe use somebody outside?
Yeah, I mean, if you remember at WWDC, all they showcased was that new liquid glass interface. There was no mention of AI. So it was pretty obvious that they had nothing new to showcase from an LLM perspective. And look, given the astronomical rise of ChatGPT and how it's taken the user and engagement share, I mean, everyone is looking to use that kind of functionality on the apps that live within the Apple ecosystem, whether it's your email, your calendar, your contacts, like the photos that are stored on iCloud. You have to ask yourself, why can't Apple deploy AI in a similar fashion where I can engage in a ChatGPT type format? And so that's the use case here. Obviously, Apple's own LLM efforts have gone nowhere because they have, frankly speaking, underinvested. I mean, look at their CapEx versus all the other hyperscalers. They're spending $80 billion. Apple is spending $10 billion. So it's just not the same level of investment. And they underappreciated how transformational this generative AI LLM wave is going to be. And now they are partnering with an Anthropic or OpenAI. I think Anthropic makes more sense to me because OpenAI has clearly said they have their own hardware ambitions. And to my mind, Anthropic is an enterprise-focused player. They have already partnered with Amazon. And in this case, they probably will partner with Apple as well.
And as Paul mentioned, the stock market, it wasn't disappointed in this news. The stock was up yesterday when Bloomberg's Mark Gurman, wrote the story, which I do think it came out.
Everything he breaks.
Yes, he does break everything. Yeah. I think the story came after the close, but still, the stock is higher today. So this is good. I mean, talk a little bit more about the partnerships, because if Anthropic is partnering with Amazon as well, like, this isn't really an exclusive deal that they're doing. Apple's just going to have the same AI as all the other tech companies?
Yeah, but Apple controls the distribution across their iOS devices, and whether it's your tablet or your smartphone or Mac PCs, it's the Apple iOS ecosystem. So if Anthropic's LLM is natively integrated, I mean, look at how much Microsoft has benefited from OpenAI's partnership. Microsoft doesn't have their own LLM. The fact that they have risen so much is because of the OpenAI partnership. So partnership isn't a bad thing for Apple. And in this case, clearly Anthropic has a very good LLM on the tech side. Maybe you could argue in terms of multimodality, OpenAI and Google are ahead. But for a text LLM, Anthropic's performance is comparable, at par with the frontier models, and that's where it makes a ton of sense that they use Anthropic.
30 seconds. Can I think about this announcement similar to Apple saying we're going to use Google for search?
Yeah, and part of the reason why there is no mention of Google here is because of that antitrust case that's pending. So clearly what Apple wants to signal is they don't want to do anything with Google right now, given that monopoly lawsuit and the $20+ billion of payment from Google to Apple. And right now they are really diversifying their exposure to these LLM players. They could have very well used an LLM. And I wouldn't be surprised down the line, once this DOJ case is resolved, and if it works out fine, they may end up using Google's LLM as well. Apple's main goal here is to have as many LLM partners and really not depend on just one, whether it's OpenAI or Anthropic. They want 5 players, and I think they would be willing to use anyone.
All right. I thought it was a big deal. But again, I kind of liken it to this whole search thing. We'll do search with Google. If they have better search, we'll use that. So on our phones. Mandeep Singh, he breaks it down for us, as he always does. Mandeep Singh, senior tech analyst, Bloomberg Intelligence. He kind of runs it with Anurag Rana. They kind of run our global technology team. We've got analysts in Europe, North America, and Asia covering the global tech industry because that is a driver of the value in these markets. This is...
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
F1, the movie. I want to see this thing. I did not see it yet, but it had a good U.S. box office, even better international box office. Emily, did you see it?
No, but it has a star-studded lineup.
Yeah.
Brad Pitt is the main star here.
I'm going to wait for the book to come out.
You're going to wait for the book to come out. John
Okay.
Tucker. And that's good news for Apple because they produced the movie. It's good news for, I guess, Brad Pitt, but maybe it's good news for F1 in general. Geetha Ranganathan joins us. She's a U.S. media analyst, and she's got an interesting angle here. Geetha, first, let's just talk about the movie. That's good to see a successful movie in the movie theaters these days. I guess the movie theater companies are pretty happy.
Very happy, Paul. So this was obviously, as you just pointed out, a big success story for Apple. They've been dabbling in these theatrical films for quite a bit now, but none of their movies have had this much of a success. So this is really good news, and I think it kind of really emboldens them with respect to their strategy. So definitely movie theaters are happy. And the other point that I'd like to make is, more than 20 to 25% of the total box office actually came in from IMAX. So this is really good news for the exhibitors because the premium large format, that whole thing about going to the theater to experience the movie is really working.
Okay, so your latest note is about how this F1 movie here from Apple is going to jolt, you say, lackluster bidding for the Formula One rights in the U.S. Just give us a little bit of context here, the landscape of rights for Formula One, who currently has the rights, when does that expire, and just put into context kind of the current bidding right now.
Sure, Emily. So right now, Formula One, as you know, is a global sports, global media property. In the U.S., the rights to distribute Formula One content is owned by Disney's ESPN. So they have rights that go through the end of this year, through the end of 2025. They're currently paying about $85 million a year. That's up from their last negotiation cycle when they were paying only about $5 million. So it's up to $85 million. But what F1 is saying is that this is such an interesting property. This is, a hot property. You should be paying up for it. And they are really looking for something upwards of about 150 to 160 million. And I'm not so sure ESPN wants to pay that much money. So it's really, price is really a sticking point here. And it looks like we've hit a little bit of a stalemate because, when you kind of think about, yes, this is a property. By the way, this F1 really kind of shot into the limelight in the U.S., Emily and Paul, with the Netflix Drive to Survive series. Now, Netflix has been hugely actually instrumental in kind of driving this surge in popularity. So everybody was kind of wondering whether Netflix or, maybe another streamer like an Amazon would kind of come in and bid for the rights. But I think what we're seeing with a lot of these streaming platforms is that they want global rights. These are all global streaming platforms. They want rights to distribute this content in all markets, and they're not going to be able to get that right now.
Because Formula One, who's their European overs? Is that Warner Brothers Discovery? Who distributes?
Sky actually distributes them in most markets. So, Ireland, UK, Germany, Italy, again, France, Spain, they all have a little bit different, distributors, but Sky is a very big one across most of Europe.
Wouldn't Apple be the obvious choice to partner up and get the rights to Formula One because they just made this big blockbuster hit about Formula One?
You would think so, but it's been a little bit of again, it's hard to actually figure out what Apple is thinking here. One thing that Apple doesn't have, which both Amazon and Netflix have, is scale. So Netflix has well over 300 million global subscribers. Amazon probably has close to about 300 million as well on their video streaming service. Apple, on the other hand, has probably less than 50 million. So they don't necessarily have the scale to support it. And remember, there are a few other things with the Formula One property. You don't have a lot of advertising inventory necessarily. So again, that's something that doesn't necessarily appeal to streamers, especially because all of these different streaming platforms are really trying to build out their ad business. Formula One doesn't necessarily lend itself to that. But you're absolutely right. Apple could be a very interested party down the road.
And for those who care, one can actually invest directly in Formula One. It is a publicly traded company. FWONK, I like, Formula One K. It's owned by John Malone and Liberty Media, so there's a million different share classes out there. But Formula One, Geetha, I mean, under John Malone's leadership, they've done a good job of increasing rights, sporting rights and sponsorships and all that kind of stuff, making it actually profitable.
Very profitable, Paul, and they've done a fantastic job with the media rights. Again, they've really capitalized on this huge surge in popularity, because remember, F1 was really more of a European, really not so big in America, but they've really kind of capitalized on this huge momentum in the United States. And you're absolutely right. They've added a whole lot of races, made it a year-round calendar, lots of sponsorship money. So they've done a very good job with this new Liberty Media management team.
Geetha, real quick, while we got you 30 seconds. Are people feeling better about Disney these days?
They absolutely are. So one of the things that we were so worried about was the theme parks, and whether, we were going to see a slowdown there because of just general economic uncertainty. Also Epic, which is the Comcast property opening in Florida.
Oh, right.
But so far we haven't seen any signs of a slowdown. So things are looking actually pretty good for Disney. All
right. Stock's up 10% this year, better than the market. Geetha Ranganathan, she covers all the global media stuff for Bloomberg Intelligence. Zooming in from Princeton, New Jersey. Again, Formula One stock, the movie opened last week. Really good box office. Not crazy good, but very good. And very good international. Got great reviews, so people think it might have legs, is what they say in the business over the following weeks here. So we'll see how that does for Apple and see what it means for the Formula One racing circuit.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
All right, let's switch gears. Let's talk about global shipping here. We've been talking a lot about that. Really, since the pandemic, when we really started to get knowledgeable, if you will, about the supply chains and where stuff comes from and where it goes and how it gets there, and how supply chains can be fragile. And now with all the geopolitical tensions in various parts of the world, global shipping and the threat to global shipping is once again at the forefront. And we're going to check in with Stamatis Tsantanis. He is the chairman and chief executive officer of Seanergy Maritime, and that is a NASDAQ listed security company. SHIP is the great symbol there. Stamatis, thanks so much for joining us here. A lot of hotspots in the world. You think about the Strait of Hormuz. We've been hearing about that over the last several weeks. Of course, what's happening in the Baltics with Ukraine. How would you characterize the current global shipping business these days?
Well, good morning, and thank you for having me. It is indeed quite challenging. We've had the COVID, and then we had the pretty much closure of the Red Sea because of the Houthis. And then everything became even more challenging with the Hormuz, or the potential closure of that. So, we tend to navigate all these geopolitical challenges quite successfully so far. It's all about infrastructure. What's going on right now, and whatever we believe to be the normalization of whatever conflict in the Middle East, hopefully, that is going to lead to a very big infrastructure boom in the area, which is already pretty much started and booming. And I believe that this is going to help shipping, especially dry bulk that we operate in, very, very much.
Stamatis, in addition to your role at Seanergy, you're also the founder and chairman and CEO of United Maritime Corporation. Together, you have a total of 25 ships in the ocean. I'm wondering if you had to reroute any shipping routes in the wake of the latest Middle East tensions.
Well, we have been rerouting a lot of our ships. About a third of our fleet has been rerouting already to avoid the Red Sea, which it was kind of underplayed how important that passage has been for global shipping, especially for big bulkers like we do. We were transporting a lot of coal from Australia to Europe because of the energy needs. And we did a lot of coal cargoes from Baltimore, USA to the west coast of India. All of this routing were from the Red Sea. Now we're going around the Cape of Good Hope. So unfortunately, that means more ton miles, more expensive in bunkers, more expensive for the consumer, and that adds a lot of additional CO2 emissions to the environment. Let's not forget about that as well.
Stamatis, talk to us about a global economy that's now being influenced by tariffs across the globe here. How has that impacted maybe your business, the business of your customers?
Well, nothing has happened so far. Everything is pretty much priced in. The world had a big alarm shock back in 2016, 2017, with the initial phase and threat by the first term of President Trump back in the day. Nowadays, everything is pretty much priced in. So, people was kind of expecting that, and we didn't see any disruption so far. What we have been seeing is all this geopolitical turmoil that has affected, for the time being, long-term buyers of raw materials like iron ore and coal. But I believe this is going to normalize as well, and we will come back to a very, very strong trading environment once again.
How would you assess then right now just the volume of shipping? A couple weeks ago, right after Trump announced the initial tariffs, there were a lot of concerns on Wall Street that shipping was going to drop, shelves were going to be empty. Do you think those fears were overblown in hindsight?
Well, yes. I mean, that initial plan on Liberation Day was pretty much, I'm not so sure how to characterize that, but of course it caught the world into a big shock. Nobody was expecting that all these 60, 70, 80, 90% global tariffs were going to go through. And it appeared to be that, after the initial shock of the first few weeks, things kind of normalized. So there are numerous deals happening with each individual country or continent or European Union or you name it. And I believe that we're very, very close to pretty much unwinding all the trouble that we saw with, with that Liberation Day. Of course, please be reminded that global trade has been continuing like nothing has happened. No, material tariffs have been imposed so far. So far it's been business as usual. We haven't really seen any disruptions in respect of that. It was more psychological, the impact, rather than anything material.
Stamatis, how does your company compete with some of the, the big global monster kind of shipping companies like, the Moller Maersk and things like that? How do you guys compete?
Well, it's a totally different industry. They operate mostly in the consumer industry because they transport containers. We are doing more bulk iron ore, coal, and bauxite, which is very, very important in the infrastructure growth of the world. Right now, we have trillions of dollars of global infrastructure being committed and fully funded. So this is going through, especially in the Middle East. As you know, President Trump has at least 7 or 8 new buildings being built in Saudi Arabia, Bahrain, Oman, and all this place over there. We're talking about multi-billion-dollar projects. And I believe that the transportation of iron ore, coal, and bauxite will help in all this massive infrastructure that we have been experiencing and all of these things going on right now. So we do not really support the consumer needs of, the US or Europe, but we do support substantially the transportation needs for infrastructure in various parts of the world. That's what we do.
Fascinating story. Thank you for giving us a few minutes of your time. Stamatis Tsantanis, he's the chairman and chief executive officer of Seanergy Maritime, also the founder, chairman, and CEO of United Maritime Corporation. Both of those are publicly traded companies. Talk about the global shipping business, and infrastructure is a big part of their growth story.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.